Hey everyone, welcome back to Corporate Decoder. Today we are diving into a document so full of promises you'd think we're about to elect a new board. Get ready because we are looking at PEDEVCO Corp's proxy statement, which is like their instruction manual for their annual shareholders meeting. This isn't just about voting. This document reveals who really pulls the strings, how much they're getting paid, and some interesting behind the scenes details of our company of focus, PEDEVCO Corp. Ready to decode it all? Corp Get started for clean-cut insights from corporate filings. Be sure to subscribe. The Discord community can be found in the description below in order for us to engage and exchange information further. First off, this document also has PEDEVCO's annual report from earlier in the year filed along with it. So a lot of information is all at once. Be sure to check for 2 different dates in here. For all the shareholders who can't physically make it, the annual meeting is a must to attend virtually. You can find instructions on how to join online. It is very important to read the proxy materials and cast your votes, even if you have to do so online. Let's talk power. This table shows who owns the most of PEDEVCO. Dr. Simon Cooks, the executive chairman, and related entities controls a whopping 65% of the company's stock. Scrolling down to the table, you can see that the SGK 2018 Revocable Trust owns over 51 million shares. And these are all controlled by Dr. Cooks, who also owns a large chunk in his own name. And this gives him huge sway over any vote. The other executives own significantly less but still have a stake. J. Douglas Schick, Clark Moore and Paul Pinkston all have holdings over 1 million shares. Regarding corporate governance, the company has different board committees that they attend for the fiscal year to make sure that they maintain compliance. They held 10 meetings during the fiscal year and took various other actions. All directors attended all of the board of directors meetings, which is a good look for a company. The board also determined that Mr. Selfo, Mr. Evans and Mr. Howie are independent directors as defined in sections dictated by the rules. These rules help ensure the board isn't just rubber stamping management decisions. One thing's for sure, PEDEVCO wants to keep their talent happy. Let's look at the executive compensation summary table. We get a glimpse into how PEDEVCO compensates their top executives. As chairman, Dr. Simon Cooks actually earned $0 in salary and bonuses in 2024, but was awarded $36,000 in stock in 2024 and $446,000 in stock in 2023. Interesting compensation. It really shows the company's belief that the value and performance should be tied to the stock's performance. J. Douglas Schick received a salary of approximately $300K, a bonus of similar comp. Keep in mind that the numbers will change to what makes sense depending on what titles and tasks that the member lists. At $120K, stock awards of $350. Interesting compensation. It really shows the company's belief that the value and performance should be tied to the stock's performance. J. Douglas Schick received a salary of approximately $300K, a bonus of 12 hit at the stock's performance. J. Douglas Schick received a salary of approximately $300K, a bonus of $1,220K. Stock awards of $350,000 for 300K, a bonus of 12 and 25 and 40. Here's a good way to see exactly how the executives plan to take advantage of their stock options and how much they will collect if they do so. Scroll down to see their names and the individual unvested stock options as of the end of 2027, then 234 shares of future potential stock awards in 2026, then 266 act in awards in 27th, then 2T6,667 in awards in 2027. That's a pretty good incentive for future milestones. It's a disclosure about the relationship between executive compensation and certain financial performances of the company. It is used to tie how the performance of the company is directly affected by the executive's income. It's designed to give investors a transparent look at how executive pay aligns with company success. The data shown is to company 9,000 total revenue in 2024, 2023, and 2022 led to compensation actually paid, which is a calculated compensation actually paid, which is a calculated compensation from the SEC in 2024. The summary compensation was $430, income was $283,700 and $125. While the compensation actually paid was $1,000, the net income was $289,000, and net income was $2,044,000, while the compensation actually paid was $383. The net income was $2,000, and in 2023, the summary compensation was $406,023, and $283,723, the summary compensation was $406,000, while the compensation actually paid was $81,000, the net income was $223, the summary summary compensation was forced to $169,000. And then 2020-2022, the summary here's where things get interesting. They have two equity compensation plans, one from 2021 and one from 2012. The 2021 plan sets aside a big chunk of stock for employees, directors, and consultants. It also contains a few details on what happens in the event of restructuring of stock corporate events or so on. As of the end of last year, there are options that are available at a weighted average exercise price of 1:N12. The total amount of securities remaining available for future issuance is around 6,545,000. Every few years, Dodd-Frank requests public companies to provide shareholders with an advisory vote on the approval of officers' compensation. To start off, they have employment agreements that protect specific employees. Carl Hughes, this details compensation arrangements for key executives like Douglas Schick and Clark Moore, which are pretty standard. Salary, bonus potential, and what happens if they get fired or leave, which is important to note as potential cost. Make sure to carefully view each individual member as their compensation and role may have very different circumstances. A key safeguard in corporate governance is what this section talks about. We want to make sure that those with control aren't bending the rules for self-gain. The big takeaway is that any major transaction that involves someone on the inside track has to get the thumbs up from the independent board members and the audit committee. The board is supposed to have a good faith and transparency. Speaking of audits, here we have been alerted to that the auditor for this year has replaced the auditor for 2024 and 2023. This could be a red flag for accounting issues or just for business decisions. However, be sure to do extra scrutiny and due diligence so you make sure that everything is legit and they are not trying to hide anything. This vote requires just a majority vote of either for, against, or abstain marks on the ballot, so make sure you voice your opinion. If you have any plans or ideas to change the corporation, now here's how you can send those filings to the SEC. Proposals must be received by March or else you have to wait. The meeting, any bylaw changes or requests for information must be sent to the company's address. Now, what's my take on PEDEVCO taking all these details together? Where does this leave PEDEVCO? Honestly, their numbers look a bit underwhelming. On the bright side, they have a huge revenue and a good handle of equity compensation plans and protection of officers, out with Dr. Cukes' trust, and this might impact decisions and directions. And that big switch in auditors with Markham, without a better explanation, that leaves me concerned. Alright, that's our breakdown of PEDEVCO's latest proxy statement. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, and I will see you next time.